Imagine a country on the cusp of not just incremental growth, but a monumental leap, potentially tripling its national income thanks to a single breathtaking discovery. For the nation of Zambia, this is no longer a distant dream, but a tangible, near-term possibility. Deep beneath the earth in its famed Copperbelt province lies a deposit named Mingamba, a name now synonymous with hope and immense challenge. It is, by all accounts, the nation's richest and most significant copper discovery in a full century, a geological jackpot of world-class proportions. If the initial stunningly positive assessments hold true, this one mineral deposit is poised to be a national game-changer, capable of lifting Zambia from a long and frustrating economic plateau. But unlocking this subterranean treasure is a task of Herculean scale. Getting the metal out of the ground will not be easy, nor will it be cheap. It requires an estimated $2 billion investment just to begin, a monumental sum needed to engineer and construct a mine that must tunnel half a kilometer or more through solid rock. The pivotal question, therefore, hangs over the entire nation. Can Zambia, against formidable odds, pull this off and fundamentally transform its future? Copper is more than just a commodity in Zambia. It is the very lifeblood of its economy, the central pillar upon which its modern identity was built. The red metal accounts for a staggering 3/4 of the nation's export earnings, making its fortunes inextricably linked to the volatile swings of the global commodities market. Yet, for more than 50 years, a strange and persistent stagnation has defined the industry. Since a production peak in the late 1960s, national output has remained stubbornly flat, hovering around 800,000 tons per year. Mingamba is now poised to shatter that half-century of inertia. Projections from the company spearheading the discovery estimate that the mine could, once fully operational, yield an additional 500,000 to 600,000 tons of high-grade copper annually. This single operation would dramatically push Zambia toward its ambitious national goal of producing 3 million tons of copper per year by 2030. The firm at the heart of this story is not a traditional mining house, but Copperbelt Metals, a Silicon Valley-based startup with a revolutionary approach. Backed by a formidable roster of tech billionaires, including Bill Gates and Jeff Bezos, Copperbelt is armed not with rock hammers and intuition alone, but with advanced artificial intelligence and machine learning algorithms. Today, we will unpack the remarkable story of how their sophisticated algorithms pinpointed this massive forgotten ore body, explore the wild economics of this multi-billion-dollar project, and confront the immense engineering, financial, and political hurdles that still stand resolutely in the way. The history of Zambia's copper industry is a dramatic roller coaster of boom and bust, a story of immense wealth generated and opportunities lost. The story of commercial-scale mining began in 1928, along the arc of mineral-rich land that would become world-famous as the Copperbelt. Following independence in 1964, the nation was riding high, its economy fueled by copper revenues that made it one of the most prosperous countries in Africa. But the boom proved fragile. In the 1970s, global copper prices collapsed, and a wave of nationalization saw the mines brought under state control. What followed was a slow, grinding decline. For half a century, as production froze, Zambia watched from the sidelines as competitors like Chile and the neighboring Democratic Republic of Congo surged ahead, their output climbing to meet the world's insatiable demand. All the while, that global appetite for copper was beginning to explode, driven by the seismic shifts of the green energy transition, the rise of electric vehicles, and the massive expansion of electrical grids. Geologists and mining experts knew, with certainty, that more vast deposits of copper lay hidden beneath Zambian soil, but the traditional tools of exploration had their limits. Finding these deep, concealed ore bodies was becoming prohibitively expensive and inefficient. This is the challenging landscape into which Copperbelt Metals entered, looking and operating unlike any mining company before it. Their offices are filled not just with geologists, but with data scientists and software engineers who train complex machine learning models. Their eye, which they call the machine prospector, is designed to digest and find patterns in decades of fragmented historical data, old drill logs, forgotten geological maps, magnetic and electromagnetic surveys, and countless soil sample results. In 2021, Their algorithms flagged a patch of land near the existing Lubambe mine, a forgotten area that had been overlooked by conventional methods. A scout drill hole was sunk to test the AI's hypothesis, and what it found was nothing short of astonishing. A section of ore with a grade of over 5% copper. In an industry where most new discoveries grade well below 1%, this result was almost unbelievable, signaling a deposit of exceptional richness. By late 2022, a strategic joint venture was formed to develop the find. It brought together Copperbelt's cutting-edge technology, the financial muscle of Australian private equity, and a crucial partnership with Zambia's state mining investment company, ZCCM-IH, which holds a 20% stake in the project. Geologists have a special classification for a discovery like Mingamba. They call it a rare IOCG, an iron oxide copper-gold deposit. These deposits are the geological equivalent of superstars, formed by massive hydrothermal events deep in the Earth's crust. They are prized not only for their sheer size, often containing billions of tons of ore, but for their complex and valuable mix of multiple metals. Early and extensive drilling at Mingamba suggests a staggering resource of 250 to 300 million tons of ore. What makes this figure so compelling is its exceptionally high grade, averaging above 3% copper, with significant and economically recoverable credits of cobalt, silver, and gold. A grade this high is transformative. It means that for every ton of rock mined and processed, significantly more valuable metal is produced, which drastically lowers operating costs and increases profitability. These preliminary numbers would comfortably place Mingamba among the world's top 10 largest and richest copper mines. Beyond the sheer grade, two other factors make Mingamba an investor's dream. First, the ore body, while deep, is considered relatively shallow for a world-class underground mine, and its geometry is favorable. Second, and perhaps most importantly, it remains open at depth. This geological term means that the deposit has not yet been fully delineated. Drilling has not found its bottom. The ore continues deeper into the earth, suggesting the mine's life and total resource could be expanded significantly in the future. This vertical potential is a huge advantage, as it allows for future expansion without the massive environmental and social costs associated with large open-pit mines, which often require displacing entire communities and create vast surface disturbances. This potent combination of high-grade ore, favorable geology, and expansion potential makes for a faster path to profitability and a more robust project, particularly in a global environment where investment capital is expensive and risk-averse. Even with such promising geology, the $2 billion price tag for development is a staggering figure that presents a formidable hurdle. Yet, Copperbelt and its partners insist the math works, underpinned by a few key factors. First and foremost are those incredible grades. The richness of the ore means cash costs per pound of copper produced will be exceptionally low, placing Mingamba firmly in the first quartile of the global cost curve. This would make it one of the world's most profitable copper producers, capable of weathering the cyclical downturns in commodity prices that can cripple higher-cost mines. Second, the timing for a new large-scale copper mine could not be more perfect. A broad consensus of analysts forecasts a massive copper supply deficit emerging by the early 2030s, driven relentlessly by the green energy transition. Some projections suggest there could be a nearly 10 million ton gap between global supply and demand. The world's shift to electric vehicles, the expansion of solar and wind power generation, and the necessary upgrades to national power grids all require vast amounts of copper. Third, Mingamba's significant cobalt content provides a major bonus. Cobalt is a critical component in the lithium-ion batteries that power electric vehicles, but the majority of the world's supply comes from the Democratic Republic of Congo, where its extraction is often associated with human rights abuses and unethical labor practices. Automakers and electronics companies are scrambling to secure ethically sourced, transparent supply chains for this critical mineral. A large, stable, and regulated source of cobalt from Zambia would be a highly prized asset, adding a significant revenue stream and strategic value to the Mingamba project. Still, raising $2 billion is a monumental undertaking. Cobalt will likely need to employ a complex mix of financing strategies. These could include streaming deals, where a company provides upfront cash in exchange for a percentage of the mine's future production, equipment financing leases to reduce initial capital outlay, and most critically, project debt from a syndicate of major banks. This entire financial structure hinges on the completion of a bankable feasibility study, a comprehensive technical and economic blueprint for the mine, which is expected around 2026. The clock, however, is ticking. In a climate of elevated global interest rates, any significant construction delays or cost overruns could seriously erode the project's projected value and make financing more difficult to secure. Building a mine that will eventually operate at depths approaching a kilometer presents a host of formidable engineering challenges. The immense pressure from the overlying rock mass requires sophisticated ground control strategies to keep tunnels and chambers from collapsing. This isn't simply a matter of drilling and blasting. It involves massive, continuously operating backfill plants. These facilities will mix waste rock from the mining process with cement to create a paste, which is then pumped back into the mined-out voids, or stopes, to provide structural support and prevent instability. Securing a reliable and massive source of power is another primary concern. Zambia's national power grid is already strained, with much of its capacity coming from aging hydroelectric dams that are vulnerable to increasingly frequent and severe droughts. A mine the size of Mingamba will be a voracious consumer of electricity, with a demand equivalent to that of a small city. To overcome this, Cobalt is in negotiations to co-fund the development of dedicated solar and battery microgrids. This would not only ensure a stable 24/7 power supply for the mine, but also contribute green energy to the national grid, turning a major liability into a potential asset for the country. Water management is also a critical issue in a region characterized by long dry seasons. The mine will require sophisticated, closed-loop water recycling systems to minimize its draw from local sources and ensure its operations are sustainable through the region's climatic cycles. Then there is the crucial human element. The Zambian government's slogan for the project is simple and powerful: triple copper output, triple jobs. The potential for economic uplift is immense. At its peak, the construction phase of Mingamba is expected to create up to 8,000 jobs, followed by 4,000 direct, high-skilled jobs once the mine is operational. The downstream effect on local suppliers and service industries could create thousands more. The tax revenue, royalties, and other payments flowing into the national treasury could be truly transformative, providing the funds needed to build and improve roads, schools, and clinics across the nation. However, the long and often tragic history of mining in Africa casts the shadow of the resource curse. In too many nations, the discovery of immense mineral wealth has fueled corruption, exacerbated inequality, and led to political instability rather than shared prosperity. Aware of this danger, Zambian civil society groups and transparency advocates are pushing hard for robust safeguards. They are calling for full contract transparency, ensuring all agreements and payments between the company and the government are public knowledge. More importantly, they are championing the creation of a sovereign wealth fund, a professionally managed national savings account to ensure that the revenues from this finite resource are invested for the benefit of future generations, long after the last ton of copper has been mined. The discovery of Mingamba is not just a domestic issue for Zambia. It is a significant strategic move on the global geopolitical chessboard. Both Washington and Beijing are watching the project's development with intense interest. The United States, concerned about China's dominance over critical mineral supply chains, has recently taken a leading role in financing the Lobito Corridor, a major infrastructure project to refurbish and build a railway linking Zambia's Copperbelt to the port of Lobito on the Atlantic coast of Angola. This creates a direct, efficient export route to Atlantic markets, explicitly designed to provide an alternative to traditional routes and reduce dependence on Chinese-controlled infrastructure. China, in turn, is not standing still. It has long been a major investor in Zambian infrastructure and is upgrading another key rail line, the Tazara Railway, which runs east to the port of Dar es Salaam in Tanzania, thereby creating competing export corridors for the very same minerals. Zambia finds itself in the enviable but complex position of being a pivot point in this new great power competition. The timeline for bringing Mingamba from a discovery to a producing mine is ambitious. Through 2025, the primary focus remains on intensive drilling to further define the size and shape of the ore body, alongside detailed metallurgical testing to optimize the process for extracting the copper and cobalt. The year 2026 will be pivotal, as the delivery of the bankable feasibility study is expected to unlock the major project financing required for construction. Soon after, the monumental task of shaft sinking will begin, a multi-year effort to create the main arteries of the underground mine. If all goes according to plan, the first truckloads of ore are expected to be brought to the surface by 2028, with a gradual ramp up to the full production target of over 500,000 tons of copper per year in the early 2030s. This entire, carefully planned schedule, however, is entirely dependent on two critical external factors: the persistence of a strong and stable long-term copper price, and the maintenance of a clear, predictable, and fair regulatory environment from the Zambian government. So, is this $2 billion project a brave and calculated bet, or is it a bonkers one? From a purely financial perspective, assuming a healthy long-term copper price, Mingamba's projected returns look incredibly attractive. The high-grade nature of the ore provides a thick margin of safety that few other projects possess. But if the copper price were to unexpectedly collapse for a prolonged period, the project's economics would become dangerously thin. Cobalt's secret weapon, it claims, is its AI-driven approach. By using data to continuously model the ore body and optimize the mine plan, the company believes it can maximize extraction efficiency, reduce waste, and keep operating costs lower than its competitors. For investors, Zambia's relative political stability and established mining history also provide a degree of comfort when compared to the profound challenges of operating in the neighboring DRC. Nevertheless, veteran mining financiers and commodity traders know that bulls can quickly turn to bust. The industry is littered with the ghosts of promising projects that were derailed by unpredictable black swan events. Widespread social unrest leading to a government-led license revocation, a major environmental lawsuit over water use during a multi-year drought, or a disruptive leap in battery technology that significantly reduces copper demand are all low probability but high-impact risks that cannot be ignored. Copperbelt and its partners are actively trying to manage these risks. The valuable cobalt byproduct provides some diversification against a copper price collapse. Proactive investment in local community development and environmental protection is designed to secure a durable social license to operate. And by lobbying for and contributing to infrastructure projects like the new power grids, they are working to create a situation where the mine's success directly benefits everyone. As we look toward the early 2030s, it is possible to envision two starkly different futures for Zambia. In the first, a new reality has taken hold. Electric buses glide silently through the streets of European and American cities, their motors and batteries powered by copper and cobalt ethically sourced from the Mingamba mine. In a town near the Copperbelt, a family once struggling with subsistence farming can now proudly send their daughter to university on a scholarship funded by mine revenues. National copper output has finally soared past its historical peak, and government revenue, managed transparently through a sovereign wealth fund, is at last beginning to match the immense scale of the country's mineral wealth. The alternative future is a more familiar, cautionary tale. In this scenario, Mingamba becomes just another headline that fizzled out, a story of incredible potential that was never realized. The geology of the deposit is undeniably spectacular, a freak of nature. The investors backing it are serious, well-capitalized, and technologically savvy. The world, without question, is desperate for more copper. Yet the immense cost of development, the profound engineering and environmental challenges, and the unpredictable currents of local and global politics form a gauntlet that no computer algorithm can fully predict or de-risk. The next 5 years will be absolutely decisive. They will determine whether this once-in-a-century discovery truly uplifts a nation, or whether Mingamba becomes another deep, dark, and expensive hole in the ground. Another story of unfulfilled potential in Africa.